Hi, Jasmine here from Redwood Financial, and this week's frequently asked question that I'm talking about is how do I grow my money through investments? So, really good question, and one that I could probably spend over an hour on. But in terms of a short, sharp answer for this week, growing your money through investments is about making sure that your money is actively working for you. Unfortunately, the same position has been for several years now that bank interest rates simply don't provide growth on our money over and above even that of inflation. What does that mean? Well, it means that the funds we're holding in bank accounts aren't actually keeping pace with the increase of cost of living, and effectively we're losing money over time. So, how can we grow our money through investments? Well, we need to have true investment strategies. Typically, for most clients, this will look at investing into some kind of investment portfolio and strategy. Now, I must say at this point, if we're going to have true investments being invested into the marketplace, then of course we need to take financial advice, whether that's from ourselves or another firm, because you need to make sure that your investment strategy is tailored not just to achieve your growth objectives, but to also make sure that you're not taking unnecessary risks with your money that you aren't comfortable with taking. What in turn that means is once you've worked out the level of risk that you're happy to take, you should then be able to have your investment planner or advisor devise for you an investment strategy that's going to meet your growth objectives, but within that defined risk level. So it might be for you that your portfolio looks at a mixture of things such as stocks and shares, cash and bonds, and tilts more towards the cash and bond side of things if you're more cautious, with a smaller weighting on stocks and shares. Now, what that means is you're going to hopefully get good growth over and above inflation and certainly what your bank interest rates are offering you. But you're still very mindful of making sure that your funds are cautious, and that's why you're perhaps going to invest more in things like bonds, fixed interest accounts. If, on the other hand, you feel a little bit more comfortable taking a bit more risk with your investment strategy and you really want to target higher levels of growth and return, then you're probably going to have a higher weighting to things like stocks and shares. Now, for you, that might look like investing in tracker funds, but also typically for a lot of clients, we would recommend that they consider active management and having true fund managers who are actively managing their funds and making sure that they're buying and selling and making sure that you're in the best position to take advantage of the market and the opportunities, not just here in the UK, but also that you spread your investments around the world. Diversification and not having all your eggs in one basket is a big key to making sure you grow your money in your investments. If we are overly dependent on one particular investment strategy or one area of the investment world, then we have the potential to actually have the opposite effect and lose money instead of gain money. Whereas it's been shown time and time again that clients who have a diversified portfolio and investment strategy invested around the world with a mix of different asset classes and also investing in different economies is shown to do better over the medium to long term and also help protect and shield you against any losses. So that would be my advice if you want to grow your money through investments, making sure that you take professional financial advice, understand how much risk you're prepared to take and therefore how much reward you are going to probably get from your investments, and then make sure that you have an investment strategy which is suitably diversified so you don't have all your eggs in one basket. That's it from me this week, and I look forward to answering more of your frequently asked questions next week.